There are two numbers that scares the Chinese government for its currency, the RMB, 7.3 and 8, and we just hit the first one amidst the economic catastrophe in China. Welcome to China Insider, I'm David Zhang. No matter how many videos Graham Stephan and other dollar doomers make about the de-dollarization and the power of the yuan, the reality is the opposite. China's currency just hit the lowest USD-yuan exchange rate of 7.3 a day ago. That's the lowest since October last year. What does this all mean? Well, as an American or Western investor, I think you should not be worried that the US dollar will collapse. In fact, it is the yuan that's collapsing. But if you do have money in China, I would get it out ASAP. This is a signal that China's domestic growth is tanked. It is in deflation. And no matter what it has essentially tried to do, the Chinese consumers and investors aren't responding. They're simply not willing to spend money. It's actually a political problem, not an economic one. China's economic problems are always political ones. So Harvard economic classes don't really apply to China. And China even put out 31 points to boost the private sector. Let me just tell you, they could put out 3,000 points and it still doesn't work. And because the trust in the government is gone. Following the exit of the 3 years of zero COVID, consumers' confidence has been destroyed. Right now, no one is spending their money on investment. And even if things are cheaper, nobody's buying. And that's leading to deflation. People are just afraid that the next day, the next week, they could be dragged into quarantine camps again or be the victim of another political movement. While the US battles inflation, China is battling deflation, and that's a much bigger problem. On the foreign exchange side, China lowered interest rates, which is unattractive for foreign investors and decreased the country's currency values. That's the economic talk. The political talk is, again, China's geopolitical decisions have alienated foreign investors. And domestically, the lowered interest rate essentially did nothing. And because no one is buying or investing, Chinese household savings reached a record of 2.5 trillion US dollars in 2022. Of course, it's higher now in this year. China's GDP in the first half of 2023 was 8.3 trillion US dollars. So the amount of savings that Chinese households have could be as high as 50% of its entire GDP in 2023, the first half year. No private sector enterprises are willing to start businesses or take out a loan despite interest rate being so low. So you see the problem, right? China manipulated their interest rates to boost consumerism. It didn't work. And now the US yuan exchange rate hits a record high. Although the number 7.3 is not the highest we've ever seen, for example, in 1999, it was 8.2, but given the large economic climate, this is very bad. Well, according to the Chinese central bank, 7.3 and 8 for the exchange rate from dollar to yuan is what they call the political bottom line, meaning that these two rates are very indicative of what's happening in the Chinese economy. And that's what the Chinese regime will do is they will step in to bring the rates back up using a so-called political toolbox. Otherwise, many economists predict a free fall from 7.3 to 8, which then leads to a bigger free fall, or the catastrophic waterfall effect, which is everything goes down, right? 10, 20, 30, potentially 100. Now imagine for now, $1 US is 7.3 RMB, but then in the future it go to like $1 US becomes 100 RMB. That's like Venezuela. At that point, the RMB or the yuan essentially is worthless. But you might be wondering, wouldn't this actually benefit China, whose main industry is export? Well, in other words, wouldn't it benefit that the $1 US can purchase 100 yuan worth of goods rather than say, 10? Well, it would be correct in other cases, but considering all the recent political climate shifts in China, the downward and negative growth of the economy, the lack of foreign investment, and the outright deflation, this whole devaluing of the yuan no longer works both in China and outside of China, or at least they intend to do. Simply put, export is no longer the biggest problem on the plate. What we're going to talk about today is a wider phenomenon that could spell the collapse of the Chinese economy. So let's expand a little bit more. Now, the yuan or RMB is a state-controlled currency. Its own value has always been manipulated by the central bank, which is controlled by the CCP. It's not a freely convertible currency, meaning that no one actually knows the value of the yuan. It's not freely traded around the world. The example I like to use is that if the yuan becomes convertible, aka the Chinese government stops controlling the value of it, it will immediately cause all the banks in China to collapse. because people will be flooding to the bank to draw out cash to convert to the US dollar, because simply nobody believes or trusts in the actual value of the yuan, right? For all we know, it could already be worth 100 RMB to 1 US dollar. And if the yuan keeps devaluing, eventually it just becomes paper, it's trash. The CCP is pushing for a digital yuan currency. If that completes, it will force people to spend money. As it's not in the bank, people can't just keep it there, but a wholly online system. But as of now, trillions of RMB is sitting in the bank and just not being used anywhere. So here's an interesting story about the yuan. Blueberry quality products. Blueberry carries some of the best skincare products out there, including this derma roller face mask. It has intensive hydration from the hyaluronic acid, and I use it once a week. It helps me keep me from getting overproduction of oil, which leads me to have acne breakouts. And of course, I use makeup when I film on camera that when I take it off, my skin gets quite dry. This does both to help me protect and repair my skin. So head on over using my link in the description and you can receive 15% off all products and free shipping in the United States if you spend $70 or more. Remember a few months ago, Argentina was loudly saying that they're paying for things in yuan now, right? Everyone was claiming that the dollar is no more because countries like Russia, Argentina, and Brazil, they're spending the yuan. Well, no one is telling you this. The reason Argentina is using the yuan is because they're out of the dollar reserve, meaning that they know they don't have any more US dollars on hand to pay for things. And in fact, Argentina now wants to dollarize, which of course is pegging their economy to the dollar, not the yuan. Argentina's central bank even had to borrow 18 billion from the Chinese central bank, $18 billion. And then at most right now they can use 10 billion. But what they're doing is taking that amount from yuan, converting it into the US dollars so that they can pay the debt Argentina owes, for example, to the IMF. So the yuan is simply being used as a token chip between two countries, but it doesn't affect anything on the global market. In other words, it has no displacement effect on the dollar. Now, because the yuan is a manipulated currency, it can never replace the dollar, not until we actually know what the value of the yuan is. Now, the question is, how does that affect China's near future? Well, remember Argentina being out of foreign currency reserves, right? How much US dollars did they have on hand? Well, some experts claim with China, they do have more foreign exchange reserves, or at least enough to cover the downfall. But others, especially Chinese experts, they claim that the foreign reserve is it's empty. Well, this all depends on where you get your data. First of all, we know that any data from China we have to take it with a grain of salt. It's usually fake, but we can still use it to predict trends. Well, at the end of 2022, when China was still in the zero COVID lockdown, there was roughly about $200 billion in a gap between the number of goods that China reportedly sold versus how much it went through the customs. And that amount accounts for over 1% of China's GDP. What this tells us is, for one, its export has decreased, but for two, that China never tells us the truth, especially when it comes to the economy. Now, China's PBOC, which is the central bank, also claims to have 3.2 trillion US dollars in foreign exchange at the end of last month. So 3.2 trillion US dollars in reserve. Now, those that say China has a hidden reserve believes that the local governments in China, along with all the banks, they can still come up with an emergency rescue package if the dollar is needed for exchange by the order of the central government, of course. And they believe that there are still billions of dollars that the state can use. While those that say the reserve is low or close to empty believe that the 3.2 trillion in US dollars, that's actually a fake number, because billions in US dollar currency were offshored by corrupt officials overseas, and as part of the reserve, it also includes the dead loans, the non-performing loans that the One Belt, One Road infrastructure project would give out. And that's also billions, right, in US dollars. That amount is never coming back. I mean, these Belt and Road projects are simply the CCP they're used to buy influence. Now, the last bit of that reserve also comes in the form of foreign companies. At the beginning of the year, we saw investors give up Chinese manufacturing. By the second quarter of this year, foreign investment in China declined to a 25-year low. This has nothing to do with product sales or quality issues. Foreign products actually sell better in China. They're just giving up on China because it's not safe to make money in China, because of the strange political risks and the very turbulent national events going on, right? Right now, they're arresting spies. There's so much unpredictability in China. And so a lot of the issues are going on at once. once that foreign company leaves, they take the money with them. In other words, China is essentially empty in some people's eyes. Now, in the end, we have to watch for where this exchange rate goes. If it continues to fall down, I think it's a collapse of the Chinese economy. It's an impending doom. But I'll give you a little bit of summary because this topic is pretty complicated. Right now, China's offshore exchange rate is at war. It's dropping to an all-time low, at least in recent months. It's currently on a defense to try to bring the rate back up while manipulating everything. And then back home, the onshore problems is that there's no business in China. There's no economic activities. It's grind to a halt because people are simply afraid to spend money. China first exposed the fact that its 2 trillion yuan foreign exchange surplus was missing last year, and then its exports plummeted, as we saw with the data, and then foreign investment was almost wiped out this year. Now the domestic economy is collapsing. It's a systematic problem, and at the same time, foreign relations have soured to a state never seen before. It's a situation where the world sees China as the enemy. So where does it go from here? The end of the regime is in sight, and that's how I feel. All right, that's it today on the episode of China's free fall of its currency exchange rate with the US dollars. If you enjoy the content, leave a like, comment below your thoughts, and subscribe to our channel today. I'm David Zhang, this is China Insider. See you next time.